Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, let's try to create the trading plan for the coming week as usual. Well, I strongly suggest that you will read our weekly analysis because the most interesting moments in the current situation on euro currency stand not on the intraday charts, not on the daily time frame, but mostly on the higher time frames and particularly on the weekly time frame. And in fact, current situation on the lower time frames, on the daily time frame, is some sort of the checkpoint. And if market will show the development that we will discuss today, this could be the real triggering point for significant upward action in the medium-term perspective on the weekly time frame. And the ultimate target of this potential move is 144. That is really could happen, depending on what market will show on in the nearest future, maybe on the coming week, maybe a week after that, but that should happen somewhere around, since we could stand now in some point of the clarification for the further medium-term perspective, because currently, as we said in our weekly research, that currently here and there some bullish hidden moments have started to appear. They are not obvious, they are a bit blurred, but they are visible. And this tells us that something is hidden under the common gradual move, choppy action on the euro currency right now. Because this development right here and right now on the euro currency is not quite logical for the situation where market stands now. Because if you remember, the current pattern on the daily time frame, in fact, the right shoulder of the head and shoulders pattern, and that is the neckline of this pattern on the weekly time frame. Here is the bearish stop grabber, and by hitting this area, market has hit simultaneously the monthly pivot point, daily overbought, significant resistance, some intraday targets, ABCD development here, and logical action suggests some reasonable retracement down, but this retracement hasn't followed. So market in fact hasn't shown due response to the significant area, and this usually happens when market really intends to show some absolutely different action, and the different action to the reaching of the significant resistance is the action to the upside. That is some thoughts that I just announced briefly, but if you would like to know the details, you could read them in our analysis, because this really, I think that it should be interesting for you. Well, but that is what about the sentiment picture. Speaking about the technical, on the daily time frame, it's not much that we could add in our previous analysis, since market still stands in the range of this candle. And in fact, the major action should happen when the market will exit from the range of this candle. Okay, here is I see the one significant moment that market has closed above the monthly pivot point. That could be really significant. Well, also take a look that market is not at overbought anymore, and except of this Fibonacci resistance level that already has been tested twice. First penetration, second, there is no barriers to the upside. Okay, market continue show to high lows here. Some pressure is growing to the upside. That is what we see on the daily time frame. On the 4-hour time frame, we have the same analysis because market hasn't changed the picture much. So you can see from our yesterday analysis, in fact, nothing has changed significantly. We still have the opportunity for the butterfly sell here with the target around 132.50 first target. 1618 extension stands 133.30 approximately. And if market will take out of these highs, I can't exclude that probably market could accelerate right to the 1618, because some stops have been placed here, while when market will trigger it, this could really add some buyer power to the upside, and market could accelerate further to the 1618, because the target of the ABCD pattern stands above these highs, and this probably if market will continue move to the upside, these highs will not hold. That is the analysis for 4-hour time frame. Also, we have the hidden divergence with the MACD, bullish divergence. While the MACD shows the new low, the price action doesn't show it. This is the hidden bullish divergence. Also, probably this could be treated as the bullish dynamic pressure, since trend in general are bearish, while market continued to form the high lows. That is the bullish sign. Well, also take a look at the overall price action. Upward action, just free at retracement. Here is also minor retracement, not reaching even the lower of this area. That is the nice context for the butterfly. This, by the way, the 50% level of that swing to the upside. Your currency likes to show the 50% levels. One thing is just a bit not very comfortable to see on the hourly time frame is that the nature of the price action itself. So you can see this very gradual and choppy price action without any hint on the potential momentum. But that is what we see on the surface. What is undercover is that the tendency that market is showing. Although at the first glance the price action is choppy and doesn't worth of our attention, but in reality this is a very significant moment that market doesn't show any bounce from the significant resistance and just creeping higher. That is some sort of the hidden bullish power that stands on the market right now. Well, analysis on the hourly time frame is probably mostly sophisticated compared to the other time frames, particularly because we do not have any patterns and because we do not any valuable fib levels, because in fact market stands in the range and it's very difficult to find the suitable points for entry and placing the stop orders and so on until market will exit this area. But if we would like trying to possess ourselves on the long side of the market, then probably we should be focused with the pivot points, because they could give us significant assistance on the coming week. Because you can see pivot points magically coincides with the major levels of this consolidation. So weekly pivot point on the coming week coincides with this support area that we have discussed, and that was our, in fact, the border that separate the bullish development and bearish development. And we said if market will really intend to continue move higher, it should hold here above the support area, and until this moment market holds. Well, and that will be the weekly pivot point in the coming week. The pivot support one coincides with the lower border and stands very close to the invalidation point of the butterfly, that is right here. While weekly pivot resistance one stands very close to the upper border of this consolidation. So how we will use it? First of all, I see only one opportunity for taking the long position, and this opportunity stands around the weekly pivot point, because very probable that market will test the weekly pivot point. As we know, in the most cases price gravitates to the pivot points and has the tendency to test it within the trading period. For us, the trading period is the week, so market probably will try to test the weekly pivot point. That will be the first hour checkpoint. First of all, because this will be the point for entry. Second, this will, if we would like to see that market will remain above this area, because if market will turn to the downside, and especially if it will take out of these lows, this not necessarily will lead to the failure of overall potential for the upward, but that will add some warnings to the bullish perspective, since that will be not quite normal development for the butterfly action, and that will increase the risk of the failure since market start move to the weekly pivot support one. So that will be the first checkpoint. We would like to see the checking of this testing of this area, but market should return right back and hold above the weekly pivot point. That will be just perfect. Theoretically, any stop for the upward position should be placed below this low. Although for some of you that will be probably extended stop, but that is invalidation point of the butterfly, and that point stands below the weekly pivot support one. This is the logical area. This is really the crucial area for the bullish development. Maybe you could get some compromise or an alternatively place the stop somewhere below this low or something else, but that is the appropriate point for the placing the stop. Well, if you could maybe even skip this trade or reduce your trading volume, but if you place stop somewhere below this low, so somewhere else in this area, well, you get the risk to be stopped out, and the overall context for upward trading will not be destroyed. That will be a very upsetting situation. Well, what about the entry point? At least currently I do not see any other opportunities for entry and any other valuable levels to watch for, except this one. In fact, we do not have anything else. The second checkpoint, if we will get lucky and market will start move to the upside, that will be the second checkpoint. It will be perfect if market will pass through the weekly pivot resistance one. This probably will happen because if market will start move up, because you can see the weekly pivot point, weekly pivot resistance one stands slightly higher than this highs, and that is the particular area where the stops now are situated. So if market will trigger the stops, it will probably pass through the weekly pivot resistance one. But moving through the weekly pivot resistance one will tell us that this is not just a retracement. That probably will confirm some starting point of some longer term trend to the upside. This will give us the confidence that market probably will continue move higher if market will pass through the weekly pivot resistance one. That will be the second checkpoint. So you can see this is a bit really sophisticated situation, not very easy to trade euro currency currently. We have the really lack of reliable patterns and reliable context. All that we have is just the bodies of the consolidation weekly pivot point, well, and the forming pattern on the hourly time frame, on the 4-hour time frame. So try to think about the situation. Maybe you will find some other solutions how to enter, how to step in, and where the place tight to stop. Maybe your trading style will let you to make some different analysis and make some different approach to the trading of this situation. But this is how I see this current situation, and currently probably it's better to avoid taking some short positions, because the current situation, I do not like the situation on the daily time frame from the bearish perspective. Personally, I do not want to take the short position here right now. Well, that's all that I would like to say on the euro currency here. You can see that it's not very easy, but I think that it's worth it, because if upward action will start, this could become really a significant action.